Welcome back to the channel. It's your boy Finesse Monster. Thank y'all for tuning in for another video. If you're new to this channel, make sure you hit that like button and notification bell so you get more content coming from me. Also, be sure to add your boy on IG at the Finesse Monster. I hope y'all been staying charged up in this type of market of everything that's going on. I got a couple topics I want to talk about for this particular video, so make sure y'all locked in. Now, this is not financial advice. I'm not a financial advisor. I'm just giving y'all my thoughts and opinions on some things I've looked into. So let's get it started. Real quick, I want to touch on this barcoding situation that's been going on. We see Mullen stock just barcoding all of pre-market, sometimes throughout mid-trading day, and also all of after hours. What's going on with this barcode? Now, a lot of people might not know this, but algorithmic trading by institutional investors play a huge part in when you see stocks doing this barcode, and they also take up a huge portion of percentage of how stocks move in the market. What is algorithmic trading? It's also known as algo trading, black box trading, or automated trading. It's defined as a method of executing trade orders with the help of automated pre-programmed trading instructions, considering several variables such as time, price, volume. The program sends small slices of the order to the market over time. Now, when you see a stock such as Mullen Automotive barcoding, seeing the price just jumping back and forth in these tight ranges, most likely it's because of institutional investors buying and selling using algorithmic trading, are able to execute trades within the small millisecond or the smallest of price movements and make profit off of it. Now, understand this also. Algorithmic trading accounts for around 60 to 73% of the overall U.S. equity trading. Source, Wall Street. According to Select USA, U.S. financial markets are the largest and most liquid globally. Sentient Technologies, an AI company based in the United States, operates a hedge fund that developed an algorithm processing millions of data points to find trading patterns and forecast trends. So you got hedge funds develop an algorithm that controls price movements in the stock market? Yeah, that sounds good. By the way, this information is coming from Mortar Intelligence. You can Google it. This is algorithmic trading market growth trends, COVID-19 impact and forecast 2022 to 2027. And also says the algorithmic trading market is segmented by types of traders: institutional investors, retail investors, long-term investors, long-term traders, and short-term traders. Now let's touch on institutional investors. They handle accounts for a group or institution, which could also be a hedge fund, and buy and sell stocks on their behalf. Institutional investors include pension funds, mutual fund families, insurance firms, and exchange-traded funds, or ETFs. Pension fund sounds familiar. Last time I heard that, retail got blamed for teachers losing their pension funds. But we'll move on from there. Institutional investors and large brokerage firms largely utilize algorithmic trading to reduce trading expenses. Algorithmic trading is particularly helpful for high order sizes. Institutional investors daily use numerous computer-driven algorithmic trade strategies in the volatile trading markets, which drive share markets. These techniques enable the investors to cut down the cost of trades and improve their profitability. Well, that's good for them. All right, final text I want to read. In April 2021, the management at JP Morgan, a prominent investment bank, announced that the growth in the fixed income futures algorithmic trading accelerated rapidly in 2020. As the buy-side traders turned to the company's machine learning equipped algos to grapple with the intense market volatility. There has been a noticeable increase in the amount of electronification and automation. During the epidemic, buy-side and sell-side desks shrink as commissions and fees shrink as well. The increase in volatility has increased the need for algorithmic trading solutions and services for handling the surge. In order to understand whether the calibration and deployment, of circuit breakers have been effective in the European Union. The European Securities and Markets Authority, ESMA, analyzed the trading data during the start of the COVID-19 pandemic in 2020. The period between the end of February 2020 and March 2020 was characterized by a significant sell-off and high volumes traded. So algorithmic trading, processing, and development has increased since the pandemic. What happened during the pandemic? Markets started crashing, and not only that, it brought in a new wave of retail investors that were hodling and diamond handing these stocks. So of course, institutional investors are going to be the only ones that have these processes and these algorithmic trading techniques, so that they can, like they said, adjust or adapt to the high frequency trading that's going on in the market today. Now, how long will this continue with algorithmic trading and barcoding and holding these stocks down algorithmically? Who knows? But I can say this, that the institutional investors that are using these systems, they're losing plenty of money with the whole market falling down. So these little millisecond profits that they're making are not gonna be enough. So they're gonna have to let these systems breathe a little bit, let some stocks run. They don't want to let them run too much, because obviously they're trading to help out these hedge funds. They're trading for these other institutions. So they don't want it to run so much that they have to cover the short positions. I do believe that if we have a recession, most likely, or the market continues to fall like it's falling, it's going to trigger a lot of domino effect type short coverings in the near future. So I know people get excited when they see a lot of institutions are buying up shares and having, long positions on the stock, but also look into who are holding these positions. You can see a market maker in there. You can see a hedge fund in there. You can see some of these other institutions that they're trading for in those filings as well. And there are institutions that are known for lending out shares to other institutions such as BlackRock. So just take that with a grain of salt. I'm just here to, give y'all my take on this information. Let me know what y'all think. That's all I really got for this video. Hope y'all find this information valuable. Make sure you like, comment, subscribe. And as usual, stay charged up. See them lightning bolts in the comment section. And stay bullish. I'll see y'all in the next one.